Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 15th of October. All right, now the pressure's right off the dollar here at the moment. Now we saw, buy the rumors, sell the fact clearly on the Treasury bonds. We had the data rolling out this week, CPI strong, and ever since then they've just sort of, if anything, cashed in. Right, the Treasury yields, US yields are way off the highs they had before the release. Equities are back going up, which is sort of the normal scheme of things. The currencies, well, these sort of ranges have been reset since the North American close on Thursday, so it doesn't really reflect what's going on. But the dollar block, okay, this is like a classic risk-on situation. Dollar block rallying and the dollar falling, right? A lot of the talk about the dollar now. This is where you can sort of get sidetracked. Just reading a little bit of things here on Metastock, and they're trying to attribute it to various things, and they're saying the US dollar safe haven profile is now off. The cards are on the table. They're ready for the Fed to start raising or start tapering. Commodity prices are higher, and all these other sorts of things. But to me, it's more a case of just the dollar had shifted so far, in particular the Treasury yields. So it's just having a breather. That's how I would sort of call it. And the fact is, equities are going up, so that's going to drag the dollar block up and the dollar down. Dollar yen being the odd one out there on the dollar pairs, it's still sort of screaming to the top side. Now, if I just give you a look at the charts, now there's a lot banked into these moves, right? A lot of short positions across the board, particularly in euro, right? So we've seen a really good squeeze to the top side. It's not like it's racing away. And that's why I'm sort of convinced this is just a bit of a clean out to the top side on a lot of these pairs. Sterling also, we've seen it sort of top out, now trading sideways. Aussie's had a great run since it hit a low of 71.80, up 260 odd points. And the Kiwi finally sort of kicking in and taking out stop losses above those levels. Dollar CAD, it's actually started to trend really nicely, obviously following oil very closely. We had strong employment numbers out of Canada last week. Not so great non-farms. It's all paints a nice picture for a lower dollar CAD. And obviously anything to do with the weaker dollar at this point feeds dollar CAD, right, to the downside. Now with dollar yen, I've overlaid oil on dollar yen, right? Japan has no oil supplies. You can see how closely this is correlating. Previously I had the US 10 years that had completely decoupled. So I've got the oil on there now. You can sort of gives you a better idea what's driving dollar yen. Now, dollar Swiss, well, you got the dollar index, right? Still sort of moving topside, but dollar Swiss, once again, a clean out of stops underneath these levels. Excuse me, got something in my mouth there. It's just a bit of a flush out, right? Across the board. Like the US economy is set up quite nicely for the Fed to start tapering. There's decrease, COVID cases, all these sorts of things feeding into the US economy. Inflation's basically on the verge of out of control, up at 5.4%. So to me, the dollar will come back, but we just need the equities, the Treasury yields to settle, right? Of course, if the Treasury yields continue to fall, well, equities will rally, and that'll keep fueling the fire for Euro, Sterling, Aussie, Kiwi to rally and the dollar to sort of drift lower, right? But we may see that turn around. I expect this is, without too much fanfare, this is exactly what we're seeing, is just a flush out of stale positions. It'd be interesting to see how today's US retail sales figures come out. University of Michigan sentiment prelim numbers there as well. Keep an eye on that, right? You're looking at the numbers now. This is the trail that you should be following, okay? The data comes out strong or weak. You want to see what impact it has on the Treasury yields, right? That seems to be directing things as far as the dollar moves go, and also see if that move on the yields matches up with the move that should happen on the US equities, right? If yields increase, equities should fall, and vice versa, right? You can sort of work that out. And obviously, if the Treasury yields rally, then the dollar should rally. So that's a bit of a bearing for you to work out, to realign and see if the market is actually working cohesively. If it's not, well, then stay out of the market, right? There's no need to get involved here at the moment now. And when I see charts like they are at the moment, where we've got a lot of good dollar stuff in play, and all these things are higher. Okay, euro, sterling, Aussie, Kiwi. You're like, okay, this is like just a flush out. You'd think it was a massive weak US dollar position, but it's not, right? So just be aware. Don't get suckered into trying to get short dollars here. I don't think that's the way just at the moment, right? Dollar CAD, well worth a look. Wholesale trade numbers out of Canada tonight. And that's all it's got. It's a bit of confusion, a bit of discombobulation across the board with a lot of these instruments. So play it as it is. If it's a bit confusing, well, and you want to trade, decrease your trade size. That's the most important aspect of this. Now, the other thing, keep an eye on these commodities, right? They have moved a hell of a long way the past short term. Let me just get that commodities page up. So that move will not last, right? Like all the moves, whether it's the dollar rallying, any particular instrument, the moves up and down, they don't just go on forever, right? So what we are seeing though is opportunities. I think when they do start waning, okay, you got gold, silver, well, copper's already moved now, sort of drifting a bit sideways. The Baltic exchange through the absolute roof. That's probably the biggest mover. Iron ore is up. Even obviously Bitcoin. Everyone's running into everything, right? Oil obviously through the roof there as well. So these moves here, I think, are worth keeping an eye on, right? Just keep an eye on like asset performance. Now, there's no reason unless you can work out exactly why. I mean, I know all the economies are coming online, so shipping costs are a lot higher. That's what that Baltic exchange is. That is just tells you so much about global growth is coming online. That goes some way to explain why the US dollar, the safe haven profile of the dollar, is out of it, because it looks like everything's turning on. Now, the good part about that is if all the lights are getting turned back on, well, we will have a lot of central bank activity across the board from all the major countries. And that's a good thing for us because it ignites and gives all the currencies direction, right? Not just the US dollar. We'll start sort of trading both sides of all these instruments as opposed to just chasing the US dollar around the path. All right. So, US retail sales, obviously the focus today, but in my view, just play cautiously because at the moment, even though we've got good dollar perspective fundamentals, we're not seeing it flow through. As I said, it's been so banked into the market for a number of weeks. It may be just taking a pause before it recharges again. All right. And then, we're going into week 3 of the month. Week 3, week 4, it's not exactly set the house on fire stuff. All the big data's out of the way. It actually may be that's when the dollar starts to cruise back to the downside. Or top side, downside for euro, sterling, Aussie, Kiwi. Anyway, that's it from me, guys. Have a good one. As I said, keep it real, tighten up your risk. Cheers, guys.